Traders, hello to you all. This is a short video on how you can uh, trade using volume profile. Rather, I am attempting to explain how you can use it for taking positions on an intraday basis or even on larger time frames. So let's see if it can maybe be of some help to you. So when I came into the markets and when I started my trading journey, I started with various indicators and tools like everyone else, and I wanted to explore as many as we generally do when we come new to this field. And I did come across market profile and volume profile. I mean, not so late in my trading journey, but I really wanted to know how I can use these tools to trade. Yes, they did seem to be very powerful on the hindsight or looking on charts after the event had occurred, but I really found it difficult to get to know how to use the information that these charts were providing, these tools were providing to take trades and apply them in real time so that I could be I mean, everybody wants to be profitable, but uh, uh, naive as I was, expecting 100% win rate, it never happens. But you see, these tools do help you to uh, at least get to know that you are wrong at some point in time and get out, and of course take advantage of the situation when you're right. So I'm not going to discuss the concepts within the volume profile in detail here, uh, as I have discussed a little bit of it in my previous video, but I would rather focus on how you can use these concepts to trade. Okay, how you can apply them. I'm not going to make a very long video. It's going to be some basic ways of how you can use this information within volume profile to take trades and improve your journey. So uh, let's start with three basic terminologies that we have within volume profile, and I'm sure you all would be aware of it. One is POC, which is the point of control. One is HVN, which is the high volume node, and the last one is LVN, which is the low volume node. Okay, so there is nothing very in depth about these three things. It's just as they sound. POC is the point of control. It is the point where the maximum volume was traded. So on this chart you can see this one where you see the black dotted line is the POC for this day. This one is for this day, and similarly this is the one for the day previous to that. Okay, so what are the high volume nodes? As the name suggests, the nodes where there was very high volume. For example, this one, then this one, and then this one, and so on. And the low volume nodes are the nodes where there was very little volume. For example, this one and this one. Okay. Now, in theory, everybody does understand what they can help you to achieve. So today we're going to attempt to see how you can use them for your trades. Okay, so without further ado, let's move on. Okay, so let's start with I have chosen Bank Nifty as an instrument. It is very volatile, so if you can figure out a way to use volume profile here, uh, maybe you can do it on other instruments as well. The concepts remain the same, the way you take position remains the same. Okay, so this is a 5-minute chart with the session volume. How you can set up these charts, again I have explained in my previous videos. So this is the last day on Monday, on the 25th of January that we had, and this is the day prior to that. So we had a good liquidation break or selling or whatever you may call it. It's up to you. What is of actual significance to us is whether we can make money out of it or not. Okay, now let's say we went into this trading day. okay, having this profile visible to us. Okay, so uh, uh, some things that I would like you to be aware of is that when you have a POC, for example, you have one here and then you have high volume nodes, what you can expect the auction to be when the price approaches these high volume nodes or POC is a sort of a halt or a bounce or maybe a pullback, a retracement, whatever you may call it. So you can expect that, okay, unless until it is a very strong uh, selling market that has been going on. For example, the one we had in March, where it just doesn't, uh, I mean, respect anything. Nevertheless, it doesn't. Well, in those markets as well, what I noticed was even if it didn't respect the levels, support and resistance levels of the previous of the indicators that we use, it did a lot of times respect the volume levels. So because these are the places where there are trades going on, the positions are being taken for on whichever side they are. Okay, so you can expect on high volume nodes and point of control a sort of a halt or a bounce. So let's see here what I am trying to say. Okay, so let's see. Okay, sorry for that. So like we have on this day, this is the day we are talking about. This is one, okay, this high volume node. Then you have one over here, okay, this one, then one over here, this one, then of course this one. Okay, so what you can see what I'm trying to say. Okay, so this is a high volume node. There is a sort of halt or consolidation, and that is why the whole high volume node is firstly formed. Then somewhere here the same thing happens, something similar over here. Now these high volume nodes, when they are forming for the first time, it may not be of significance then, but these really do come in handy later on. Okay, so for example, later in the session, if the price did come up here, okay, you would have expected a small bounce up to the other low volume node or another high volume node. It depends. Okay, and similarly, if it is nothing has happened here, you do expect it happening or being of some significance later in the day. Okay, so now let's move on to how we can use it for the, for example, for the next trading day. Okay, so now suppose we are to take a trade on this day. So what do we do first? We go into the smaller time frames and we start marking these high volume nodes. It might be a little tedious in the beginning, but believe me, with a little bit of practice and with years or months or days, whatever, you would certainly become better at it. Okay, and you wouldn't need to do what I'm doing here. It is just for uh, getting an idea or hang of what we have to do. Okay, so these are the various places where I think there would be or they would be of some importance. You see one here, okay, it's just above a low volume node. I would mark this one as well, and somewhere this area. Okay, and the last one is the POC, so of course it is there. Now, having spoken about a high volume node, what does a low volume node do? Okay, so what are low volume nodes? As we discussed, this is one. Okay, this, sorry for that. Okay, this is another one. Okay, so in my like, it's similar to what we have in market profile. So all guys who do not know market profile, it doesn't matter, it's what we call as single prints. Okay, so they're not exactly similar, but what it is that there was no volume traded, there was their low liquidity zone, so the price just moved uh, very fast away from them. So this place, when it was actually the auction happened, this happened, and the price never, there was no action happening on these nodes. Okay, these low volume nodes. So what does that tell you? It tells you that price, when it comes, or the auction when it approaches this point, there would be a sort of a rejection or a bounce or a pullback, as I explained earlier. And if it does breach this low volume node, there is a very high chance it is going to the next high volume node or the next low volume node. Okay, so uh, how do you trade a low volume node? If it breaches, for example, this, you wait for a pullback here, and then you can expect it to go back at least once. Okay, this is not sacrosanct, but again, you have stop losses in place, and this is a way to use a low volume node, because it's broken a low liquidity zone with real fierce volume, and it left this low liquidity zone, so it probably would hold at least once, is the philosophy behind this. And subsequently take a trade. Again, you have stop losses, so there is nothing 100% in these markets, but this is how you can trade them. Similarly, you have this one over here. Okay, so there is no volume and it breaks here, so again, the market never comes here, it does come here, so this is a good trade. As soon as it break, it gave you a chance. It didn't give you a chance here because it just went really fast. It came up and there was a chance later. So when this happened on a lot of grounds. Okay, it broke this, the low of the day, and then it did give you a chance to maybe go lower. Okay, now what we are doing here is not talking about this particular day. We have to use the information that we just gathered for the next day. So let's move on to the next day. So before I do that, let me do something. Okay, let it be like this. So the day opens. Now we have these levels marked. Okay, the day opens. This happens to be the VWAP for the previous day. So just a small nuance. The VWAP of a trending day, a previous day, does help and does is a good reference point to start with. So there are so many things that are in confluence over here, the VWAP, the level we marked, okay, the high volume node, and you see the market resisting for 2 candles on this day. Okay, the start of the day. So generally you should avoid trading in the first 5 minutes. Okay, so you see a sort of rejection, as you may call it, some may call it pin bar, and on the second or the third candle you can enter here with a stop loss. Many would tell you this, I would rather have this above the high volume node of the previous day, and again I would have this as my target, the first target, not this one, sorry, let me erase everything again. This was the day it closed. Okay, so I would rather have this high volume node as my target. Okay, now some would suggest again the low, but if I am correct here, okay, and I'm expecting the auction to go down, certainly as we discussed, and I am expecting a bounce or a consolidation phase only in the next volume, high volume node. So this is the one. So you can see, sorry, this was your stop loss and this is your target. So it's a good risk to reward, 1:1.5, and it's a decent risk to reward if you consider on intraday time frame. Okay, so now let's move the cursor here. Okay, so this is one trade, one good opportunity. Now what actually happens, you do get your target here, but we don't get what we expected. We don't get a bounce on this high volume node. Okay, it just rips past. So again, there's a lot of emotions that would have gone into this, is as a scene, and I was discussing similar things were happening in March when there were high emotions involved. It just used to break very fiercely, and you can be really caught in the, I mean, on the wrong side if you do not have your proper stop losses in place. So, and the next one is this one, which is the POC of the previous day, and it does show some sort of I mean a halt or a consolidation, but it's again not able to hold. So even if you enter here, okay, uh, again the same concept, because this is not holding and it's going on, uh, there is no, I mean there is you can have a target depending on your stop loss. So the stop loss would have been this place, okay, above this high volume node, and the target would similarly would have been this place. But I would rather not take this trade because I am already too late into the fall. The fall, if you can see, is almost 500 600 points. So At this point, again, some would go call it going against the trend. What I would rather be doing is waiting for a pullback. Okay, but again, uh, this pullback is very, very difficult to take because you do not know where it is going to end. The way it was going down, you do not know where it's going to end. So what I do is, when I see this very good strong up bar, and then I see this holding the last day's POC, which it should have at the first place but did not and went down, I would have initiated a trade somewhere here on the close of this bar and on the beginning of this bar, and stop loss is same, it's below the POC of the last day, and the target again. This time I know if this breaks all this, let me clear this again. I know that if I go a little bit further up, I will not have this as my target or the VWAP. I know if this breaks, we are really going in for a good short covering. Okay, so I would take a gamble up to the low of the day, which was the low of the day, the previous one, and which was broken in the third or the fourth candle. Okay, so you look at the risk to reward you have here. Okay, of course, in these markets, you cannot just sit there waiting for the target to hit. This happened, but you can never be sure in an auction like this what is going to happen. You can never be sure. You always need to be on your toes, always need to have your stop losses in place. So what you could do is, as soon as this candle ends, you could really swiftly take a stop loss here below this high volume node. Okay, and then subsequently whatever happens. Okay, now uh, uh, this is the way you can find your trades. Now you can also do this on larger time frames. Okay, what I also have here, if you can see, if I am unable to see the past few days, so I have the visible range high volume nodes in case I missed the previous ones, and they are there, and I can simply, if I do not have the lines drawn, I simply look to the right and I see, okay, I know of areas which are forming and which can act um, as a hindrance towards my target, or I mean, which could help me in deciding my stop loss levels. Okay, so this is, as we discussed, on an intraday basis. The similar way you could do follow these concepts for on larger time frames. Okay, so let us first delete this, and now let us go a step further. What if uh, I I have this data now, all these levels are breached, and I want to find something uh, within the day, use this data as well. So for this, we have a very flexible tool, or as it is called, the flexible volume profile or fixed range volume profile. Okay, so let me just change over to the other chart. Okay, so let's start with a 30-minute time frame, and just so that we can, I mean, have a look at the larger time frame as well. Okay, so fixed range or a flexible range volume profile is, you can just move around and find good swings and see where the most uh, I mean, the place where the most contracts were traded, find high volume nodes, low volume nodes, and so on. So for example, I see this zone as a start of a new, I mean, let's start from here. This is one zone where you had a good uptrend until this pullback. Okay, so you have this. Okay, you have high volume nodes over here. Then let me do it for this. This is an uptrend but a sort of consolidation zone. Okay, so let's start from a little bit, let us have it as an overlap. Okay, so this is the one. So you see where I'm going with this. Okay, then let's start with this consolidation zone. Okay, so, and with practice you would see things much clearer, as you can see. Okay, so let's do the last one. Okay, so when you have done this larger time frame analysis as well, So one thing you would have noticed is that what we did, or rather what I was expecting is to market the market option to have a bounce of this place somewhere. Okay, so you can see why I did that, or why I did hope for that. Of course there is a swing low at this point where the market bounced from. And the other thing what you can think of in terms of price action or volume rejection. So in markets like these where you are not sure, okay, this is another high volume node where it stood and then it failed, and there was a quick reaction to it. What you could do is you could take a debit spread or a credit spread so that you could have some advantage. And uh, because it's going to just whiplash, so stop losses would just get triggered left, right, and center. So you could, on a longer, larger time frame, you could have placed a stop, a trade over here, okay, and a debit spread, so you do not need to have a stop loss. A debit spread is nothing like, for example, uh, you had a position, you took 31,000 CE, okay, and you shorted 31,000, say 200 or 300, whatever you are comfortable with, even 100 would do, okay. So this is a debit spread, okay. And what would you have target? What would your target have been? This low volume node, okay. So, and once you get there, just get out. It again depends what your risk is. If you're trying this and you are new to it, you can have it even 31,100 C as a short. If your risk appetite is more, and your I mean you can work out the risk reward ratio, you can do it 200, 300, depending on what you're comfortable with, okay. So new traders, if you're not comfortable, just 100-point difference, you still make some good 50, 60 points, okay. Of course the move was for 500 points, but again it's really risk free, okay. And you do not have to bother about what if my stop loss hits. It's really cool, calm, and a planned way of taking risk off the table and trading what you see on the charts. So this is what you see for a larger time frame, okay. Now let me discuss something else as well. Just a minute, let's expand this. Now some would say uh, that would you take a trade now where it has come back again to the same level, okay. My answer is simply no. uh, this bounce, it's not a small zone, okay. It's not a small POC or a small high volume node. This is a lot of volume that has been traded here, okay. Even in this part, when it shot up, there was good amount of volume. So and I would have expected this to hold, and hold in the sense that when it came here, I would have certainly, yes, I would have expected a small consolidation like this. That's expected, and we discussed for a low volume node, a small reaction, pullback, and then back to at least this point or this point. It didn't happen. What happened instead was it came back. Now this doesn't mean there's a start of a downtrend, but this does not give me confidence in taking another long, okay. It's not giving me any confidence. I would wait. And does it mean I go for a short trade? No, absolutely not, because believe it or not, we are in an uptrend, and to I still need some more confirmation whether we are going to enter a downtrend or not. And even if someone does decide to take a short trade here, so what we have discussed, we all know what our targets are going to be, okay, and what our stop loss is going to be, okay. It's that simple. So if you decide, again, you can't take a position here for a target of this place. This is so not good in terms of risk reward. So you need to get a place to take a short position somewhere here, okay, depending on how the auction is going, and then take a trade. And with time you will certainly get confident. Okay, now let's move on to the last part, that is how do I use it on an even shorter time frame. Okay, sorry, let's take all this out. Do we have ones before? We can take care of that later. Okay, so this is a shorter time frame. Now suppose you come into the markets at about 1300. Okay, and you want to use the data from within the day of volume profile as well. You do have the session volume, you can certainly make use of it, but when you have this flexibility, why not use it? Okay, so as we discussed in the larger time frame, this is the start of the day, so this is one. Okay, and this consolidation zone of the last day is one. Okay, and if you're wondering why I'm doing it the way I'm doing, it's because I'm using major swing points where I think a lot of activity has happened and how it could help. It would certainly, with time, you would really get better at this. So you need not worry about it. You can practice and find your own ways. It's a very flexible tool, and you can really use it to your benefit. Okay, so as you can see, so and the last one, if we were somewhere here, okay, and you wanted to take a trade somewhere here, okay, oops, why is it not? Okay, now as you can see, the chart says it all. So you come somewhere, uh, as I said, 1300 and 1330. So with what we have discussed, this should now not be very difficult for you to, take a trade. And don't be afraid of losing. Well, we are here in a business where losing is the part of a game. It's just that you need to win big, uh, lose smaller, and even a 50% rate is good enough. Okay, so now let's just discuss only one trade as we are running short of time, and call it a day. So as I said, if you're coming somewhere here 13:30, 13:15 late into the day, you do not want to take part in all this. This is so, it looks small but it is really volatile, believe me. So you want to come into the part of the day where there's relative calmness in the market, and the auction is something you can handle because the stop losses in these areas were really wide. Okay, now again you can look at price action. It would also tell you the same thing when this happens. Okay, now firstly, when the downfall took place and it broke this high volume node, as I discussed in the larger time frame, this is the same level. I was expecting it to consolidate here. Okay, sorry for that, and uh, and move up, okay, to this volume node, high volume node, and or this one of, like this. Okay, something like this. I was expecting this to happen. It didn't, and then this happened. Okay, it went down and it came the second time. By this point I was certainly not sure whether it's really going to go up. It really seemed to be an emotional day, and as soon as you can see this trend line also, this breaks. Now I'm just waiting for this high volume node to break, and somewhere here, even if you do not want to trade, this is really tempting to take a trade somewhere here with a stop loss right here. Not this is also, by the way, 100-point stop loss. It might not seem much, but the day was so wide and so volatile. This is also 100-point stop loss. And where would my next target be? Well, someone trading on price action would have this target, I would rather have this one, my high volume node here. And again, you can see why, because if uh, if it couldn't hold, firstly, if it has gone up with an intention to go up, this shouldn't have come back again here. Okay, and I am sure this is not going to hold if it goes down and I'm right. If I'm wrong, I'm fine with the stop loss, and this is at least my first target, and see where it holds and consolidates. So some would argue again, you can take another shot here uh, when this breaches at this point. This is a similar trade that we took in this during the start of the day, but again, this is too late in the day. It's the low of the day and it's not broken, and I would not be comfortable with that trade. So again, this could have been a scalp, this part, but again, it's not what I would have done. I would have rather waited. And yes, of course, if you're looking for quick 30 points, 40 points, 50 points, 100 points, 100 is too much, then yes, this would have worked. Now that we have done all this, what you can do to get a hang of this particular way of using volume profile for your trading is, firstly, go to the last day of volume profile, that is 25th Jan, and use your session volume that we have here, okay, as a way to the volume nodes here, the POC here, and mark those levels for the next day. And similarly, uh, during the day, during the time the auction is going on, during the market hours, you can try this and see how it works. Okay, so and again, you need to have the right mindset towards it, and it's not that this tool is going to work for everybody. It's every tool or every method is unique to each individual. So if you feel comfortable with this, well, this is a small method or a way to help you uh, make utilize or make good of the information that this powerful tool presents, because I certainly do believe that volume precedes price. Okay, so having said that, let's call it a day. Hopefully I was able to improve some of your concepts pertaining to volume profile, and hopefully I'll be able to help you, or you would be able to help yourself taking trades and being better at this. That's it for now. Thank you so much. Hello traders, hello to you all. This is a short video on how you can uh, trade using volume profile. Rather, I am attempting to explain how you can use it for taking positions on an intraday basis or even on larger time frames. So let's see if it can maybe be of some help to you. So when I came into the markets, and when I started my trading journey, I started with various indicators and tools like everyone else, and I wanted to explore as many as we generally do when we come new to this field. And I did come across market profile and volume profile. I mean, not so late in my trading journey, but I really wanted to know how I can use these tools to trade. Yes, they did seem to be very powerful on the hindsight or looking on charts after the event had occurred, but I really found it difficult to get to know how to use the information that these charts were providing, these tools were providing, to take trades and apply them in real time so that I could be I mean, everybody wants to be profitable, but uh, uh, naive as I was, expecting 100% win rate. It never happens. But you see, these tools do help you to uh, at least get to know that you are wrong at some point in time and get out, and of course take advantage of the situation when you're right. So I'm not going to discuss the concepts within the volume profile in detail here, uh, as I have discussed a little bit of it in my previous video, but I would rather focus on how you can use these concepts to trade. Okay, how you can apply them. I'm not going to make a very long video. It's going to be some basic ways of how you can use this information within volume profile to take trades and improve your journey. So uh, let's start with three basic terminologies that we have within volume profile, and I'm sure you all would be aware of it. One is POC, which is the point of control. One is HVN, which is the high volume node, and the last one is LVN, which is the low volume node. Okay, so there is nothing very in depth about these three things. It's just um as they sound. POC is the point of control. It is the point where the maximum volume was traded. So on this chart you can see this one where you see the black dotted line is the POC for this day. This one is for this day, and similarly this is the one for the day previous to that. Okay, so what are the high volume nodes? As the name suggests, the nodes where there was very high volume. For example, this one, then this one, and then this one, and so on. And the low volume nodes are the nodes where there was very little volume. For example, this one and this one. Okay. Now, in theory, everybody does understand what they can help you to achieve. So today we're going to attempt to see how you can use them for your trades. Okay, so without further ado, let's move on.